Hey guys, welcome to another video. As the current situation goes on, as I told you, several companies have been tested out and many of them yet suffered huge losses. But there are some ones that are still capable to handle at least some department, and that's the case of Johnson&Johnson company. So there we're going to be talking about this company, and as always I want to start breaking all the numbers before we dive in some more details. So as you can see here, the stock has had a huge sell-off for the past 2 months. So from its peak on February 5 here, outperforming the overall market that had dropped about 40%. So actually, this is for those of you who don't know, Johnson&Johnson is one of the biggest companies in the medical and pharmaceutical industry, and is actually an industry that has been reacting pretty well to this situation. That's why Johnson&Johnson is not experiencing huge sell-offs as other industries are. However, there are some things that you need to understand so you can come with a clean and accurate answer whether this is a good or a bad investment. First, is very important to look at the P ratio. So if you look here, we can see that the company is standing at the 21 P ratio, and if we look at the past P ratios of the company throughout the years, we can come with a pretty close number, around 20. For my calculations, I'm going to use the 20 P ratio. So from here I can say that Johnson&Johnson is most likely to be trading at a fair value due to their current P ratio. But let's make some more calculations. So if we take the average of the earnings from the past 3 years, if we take that average, and actually I'm going to exclude 2018 because this number doesn't make sense comparing with the others, so actually I'm going to exclude that number. So we can and times this so we can get what would be the fair value. And if we compare with this one, you can see that the company is trading at a fair value at the moment. Just a reminder guys, I'm not considering future growth in these calculations, I'm just considering past performance, so the stock price might be a little inaccurate. So if we look at more statistics here, we can see that they are expecting to be doing worse this year. They have huge profit margins, around 18%, 20%, so it's a very good margin comparing with the competitors. They have a big return on equity, as you can see, 25%, it's huge. And if we look at more data, we can say that this is a pretty obvious growth stock and has been growing throughout the year. Now I want to dip into the balance sheet. So this is the thing that you should look at when investing in these times. It's notable that they have a lot of cash, however they also own huge amount of debt, and I want to dip into the balance sheet a bit more so you can understand where all of this debt came from and see if it has an impact, and a direct impact on the company's performance for the time we are experiencing. So what I want to point out is just the current balance sheet, and what I mean by that is that basically we will just take in consideration the next 12 months of the company, so the current assets, the assets that they have during this year, and current liabilities. And if we look at this, we can see that they have roughly $20 billion in cash and total current liabilities about $36 billion. So as you can see by these numbers, we can say that the company doesn't have the cash needed to pay all the debt. But if you look here, the current assets, it's actually bigger number than the current liabilities. So if they really get in trouble in the future, they can sell net receivables or inventory and still pay all the debt. So let's make some expectations here. If we expect Johnson&Johnson to be doing half of the revenue quarterly for the whole year, we still get a decent amount to cover that debt. However, they will need to manage the money very well in order to succeed in these times, okay? And the other thing here is the accurate liabilities. Basically, the accurate liabilities is money that they owe to other corporations. And seeing this trend right here is not that comfortable for an investor looking to put his money in the company, so they really need to improve this department. Overall, I think this amount of debt is not that concerning, as I said before, for the company moving forward. They are in a very good position when talking about cash in hand, and if necessary they can sell inventory and still cover all the current debt. You can see the insane amount of cash flow. So I want to show you here the problems that I found in the cash flow statements, because if you look at the free cash flow, so huge numbers, they have been increasing the cash flow a lot throughout the year, so very good aspect. But if you look at the sales and maturities of investments during the 2018 year, they decreased this number by about 90%, which is scary, but they invest a lot of money in other financing activities, as you can see here, switching to negative to positive numbers, so very good thing. And of course the acquisition of the Swiss medical company Actelion for $30 billion. That's why you see these variations, huge variations of numbers. Talking about dividends, I want to say two things here. First is that they have been increasing their dividends, which is perfect for an investor who is looking for dividend stocks. However, they have exceeded the 60% of payout ratio that I consider maximum in order to the company afford that payments of dividends, giving all the factors of the Johnson&Johnson company and giving all the cash flow they make, and considering this number that is not that far away for the 60%, I can say that Johnson&Johnson can afford the payout ratio, and it's not that concerning looking at this percentage. I wanted to say that despite Johnson&Johnson expect to be declining next quarter, if we look at the analysis, they still do think and estimate they will grow about 3% this year, and also they expect to be growing for the next couple of years, which obviously stands to be seen. If you look at the main competitors of Johnson&Johnson, we can see that Johnson&Johnson is the only company of the three that really have sufficient assets to pay the liabilities, as the other two don't have. So a huge advantage Johnson&Johnson has. So as an investor, I would rather be investing in this company than these two others because of the importance that the balance sheet has nowadays. Okay, so I want you guys to understand that to make a good analysis, you also need to look and to know what the company does. Remember that we are seeking for value on the company as a long-term investors, and we want to see if the company has a good perspective going into the future. So Johnson&Johnson, as I said in the beginning of the video, is in the medical and pharmaceutical sector, and they not only sell products but they also develop vaccines, etc. They operate in more than 170 countries, then they have 200 subsidiaries. Very well-known company, however they were investigated 2 times due to controversial actions. With that being said, it seems like Johnson&Johnson is very prepared to handle this situation, and if we take a look at these articles from the Johnson&Johnson company itself.
So I want to read this part here. When Hurricane Maria devastated Puerto Rico in 2017, our company quickly resumed full operations of our supply chain facilities on the island. We also leverage our global manufacturing network, activating backup production sites and supply channels to help meet demand. When Ebola struck West Africa in 2014, we activated to support research and development and then the scale-up of a new vaccine. While today's situation is different from those two,
many of the challenges we face are similar, and we already see how the value of learnings from those previous challenges are making us stronger this time. This was written by the Vice President and Chief Global Supply Chain Officer. And other article here, if you see right here, this article was written late January of this year. Actually, they were already mobilizing people in order to be prepared for this huge disease, and actually it is a good thing to read. This means that they were taking care of this problem much before it started to become a much worse reality. My view is that Johnson&Johnson is a very solid company with very good numbers and balance sheets, and with a very good perspective moving forward. As a very good dividend stock, is always worth it to value the stock instead of pricing. I think this will end up the video, and as always, I'm not a financial advisor, and you should do research for yourself when looking to invest in these companies. I'm just giving you information and share a little bit of my thoughts in the company so you can be more aware of that and consider this aspect
when you do your own research, okay?
Peace.